Here's how to read a stock with example. If you're new here, hi, I'm V. I'm a 26-year-old with 100K invested in the stock market, and I'm on a mission to make personal finance concepts more accessible, so follow along. Here are 3 core concepts you need to understand to be able to read a stock. The very first one is market capitalization or market cap. This tells you how much the entire company is worth on the market right now, and you get this by taking the current share price of the company and multiplying it by the total number of shares. Now you'll see different types of caps like mega caps. Those are companies that are worth 200 billion plus, like Apple, Google. And then there are small caps that are worth between 300 million and 2 billion. And these are often smaller companies. These are often high growth companies, but they do carry more risk and more volatility. So the key takeaway for you is to not judge a company's size by its share price, because a $10 stock could actually belong to a much bigger company if it has far more shares. The next concept is shares outstanding versus public float. It's basically about understanding how many shares actually exist versus how many you can actually buy. The very first one is shares outstanding. This is the total number of shares issued by the company that also include locked shares that are being held by executives, founders, or also early investors. The next one is public float. This is the actual number of shares available to everyday retail investors to buy and sell on the open market. Now this metric matters because if a stock has a low public float, few shares are actually trading in the market, and high demand for a low float stock can actually cause sudden big changes in the price. The very final concept that I'm sure you've heard before is P/E ratio, or profits to earnings ratio. This actually shows how expensive a stock is compared to its actual profit. It shows how many dollars an investor actually pays for $1 of annual profit from that company. Now, if you see a high P/E company, example 35 plus, what that might mean is the investors are actually expecting that company to grow really fast or produce really high profits in the future. But that might also mean that the company is overpriced at the moment, so be careful. Now, if you see a lower P/E ratio, let's say 12, what that might mean is that the company actually exists in an industry that is having a slow growth or has slower profits, but that might also mean that the company is undervalued as well. Now, a pro tip here is to actually compare the P/E ratios of that company against other companies in the same industry to make sure you're actually betting on the right one. Finally, you can also look at volume to see how many shares actually traded today, or you can also look at the 52-week range to see the highs and lows of that company. Now, in summary, market cap actually gives you the size of the company, the float of that company shows you the availability of the shares in the market, and the P/E ratio shows you the valuation. Save this video for your next stock search and comment below what stocks you're looking to buy at the moment.